Hey, this is Jack from Alpha Charts with a state of the market video. Today is December 17th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's get into these charts. We had a gigantic move this past week, from top to bottom, and that's the CPI Tuesday, right? Top to or the bottom on Friday. That was a 6.79% move. On the week, it was only 2%, but the intra-week move was absolutely sick. Obviously price came right up to the trend descending trend line, touched it again, reversed off of it again, took out this trend line, which is no longer valid, right? And it was a very strong move to the downside. Now you see there's a little like this big volume here. It was quad witching. So that explains a lot of the volume, but you did see some selling into the close. So I would think that next week you may get some kind of weird dead count bounce, oversold type of bounce, but you have a declining 200-day, you have the 50-day, which is gonna, if price can stay in this area, will start to flatten out again, right? And you may get that turn lower if we get a weak bounce and then a move lower here. As far as levels, this VWAP from the 2018 low, which was on Christmas Eve, I believe. That's the pertinent one, right? That's the one that held here a bunch of times. So now this is the next level that I would expect this to head to. So that's another 6 to 7% lower. Again, we may get a little bit of a bounce, maybe into this 3900 area, and then then maybe a turnover. But overall, just very, very weak action. Again, on the week we had a 2.09% drop. Looking at the RSP, it's in the same general area, 1.85. It ain't that much better. So there's that. It did hold at the 50-day, which I guess is slightly better, but you see the trend line, similar enough trend line, similar enough double touches, similar enough failure, similar enough declining 200-day. There's nothing, RSP is not outperforming in any way, shape, or form. They look exactly the same. Looking at the Qs, on the week, the Qs were down 2.76. Again, pretty nasty price action. Again, trendline touch, declining 200-day, well underneath the 50, which is now flattening again. All right, this is going to be a problem. Will we get a bounce next week, especially early on? We could, right? That's a possibility, and that'd be a reason to, if you're still in a long position, you may want to consider, exiting until the market tightens up and calms down some, because the weight of the market looks very, very heavy so far. On these indexes, again, very strong move to the downside. Top to bottom was, oops, if I click the button right, top to bottom was 7.6%. Again, that's from CPI, the big fade, then the FOMC, and then everything else just kind of fell apart from there. Next up, maybe this trend line, which maybe may coincide with towards the bottom of this range. And then this 237 area, that's a possibility, which is here. And then looking bigger term, right, we have this 192 area. You're going back to SPX really fast, bigger term, right? So I posted this on Twitter. Not that I think this is going to happen, but I figured I might as well just share this here. Let's go to the monthly chart, just make my life easier. And there we go. All right, so here is the from 1932 lows on the SPX, and there's your trend line. And so, are we due for another trend line touch, right? Is that a possibility? Well, think about this. That'd be another 47% down. Now, I'm not calling for a 47% deep move because I don't know what the future brings, but this trend line has been important 1, 2, 3, 4, 5 times already. So, it's not out of the question. It's a possibility. So we just have to be aware of this and be obviously careful for it. Now, could this chop around for a year or 2 years? Kind of like what happened here, right? Kind of moved sideways, right? And then eventually touched. And could this move sideways and then potentially touch? That's a possibility too. Or maybe it doesn't even care about this trend line. But I just want to make you aware of this because I did post on Twitter this past week on that particular trend line. All right. Equal weighted Qs. Do they look any better? Yeah, no, they don't. They're above the 50-day. So I guess that makes them look a little bit better. But you see how toppy this has been. And we've been talking about the Qs being a top, right? I mean, that's nothing to see here. Silver declining 200. Yes, your 50 is going up, but again, if price hangs out here for a little bit longer, you're probably going to see this start to flatten out, especially if price gets below this area. Again, nothing to see. IWM, really ugly. We talked about the head and shoulders. We talked about this trend line break. It did all of that, so we don't like that. Flattening 50-day, 200 days declining. This area has been trouble. We're now getting to the point where, again, we may get a bounce, right? Maybe into this 50-day 179-ish. But really, I'd expect another 4 or 5% to the downside, and then we'll see if it does come here and eventually break this area. That's a major area. So going back to what this area is, this was the 2018 highs, right? And this again was 2020 highs before COVID. And so this is a major support area. 200 break. If the IWM breaks this, then I mean, I think there's a good chance that we get another 20%, which is this next major area. I don't know if that's what's going to happen, but this is definitely a toppy looking chart. So just definitely be careful. Do we get there in one day? No, I think that's highly unlikely. And again, we may get early week strength, but this is the area that's got to hold, right? We don't care about this area so much as we really care about this area. So IWM looking pretty rough. IWO, similar enough looking chart. It's got a little bit more space to the downside, I think. Let's just see. Not that much more. 6.5%. So yeah, IWO, which is a small cap growth, looks very similar underneath the 50-day flattening, underneath the declining 200-day, kind of head and shoulders esque, whatever. Mid caps, we were hoping for some kind of bottoming look, and it's not technically dead yet, but it's underneath the 50-day, underneath the 200-day. 200 days declining. It hasn't been underneath the 200-day in a while, right? It was looking the strongest by far of all the indexes. And I guess technically, top to bottom, it's done better than most of the indexes. But if it falls, it can fall pretty good, right, to this area. This green area is still potential for it to fall to. So mid caps, again, not looking great either. They were down 2.46 on the week. Let's see what IWM was down. 2.38 on the week again. But the volatility midweek has been really impressive, but on a bearish scale. Let's look at the ETFs. Let's look at XLF. Right? XLF, again, back under the 50-day, declining 200-day. We talked about the broadening formation here. And that's why I've been really watching broadening formations, because once you start to see them and you realize that this is talking about, volatility increasing, and usually volatility like this increasing is going to be, from what I've seen, I haven't done any studies on it, but most likely this type of volatility is going to be to the bearish side. Tightening up right? Tightening up would be more like to the bullish side. This would be, I would consider this maybe more of a tightening up right over here. So anyway, but this is volatility to the bearish side. Again, is it dead? No, you may, make this higher low here, which I kind of already had drawn in. I don't know if that's going to pan out or not, but it's not, it doesn't look good. Let's just put it that way. I would not be surprised, again, this $30 level, that's the part that's got to hold, right? That's roughly 10% lower, but that was a 2007 highs. That was a 2018 highs. That was a 2019 highs, right? So that $30 super important. If $30 breaks in XLF, that's a completely different world that we're in. Okay, so that's definitely something to watch. SMH, we were watching this kind of this flaggish area, right? You could see the volatility, throughout the week, really, really kind of, see the broadening pattern in there. So it held, but my expectations is that it's going to fall lower, right? That's from what I've seen. There's no reason to believe that semiconductors are going to break out at this point, even though they're technically still in a general range. Above a 50-day, which is surprising, which is nice, right? That's really nice to see. Declining 200-day can obviously hold that. So yeah, so again, holding up better, but still nothing to write home about, right? Weight of the market on the week, they were down 3%, right? So if you really look at the weekly move, it was on par or a little bit worse than most of the indexes so far. Next up will be transports. So look at the transports, right? Oof. Again, there's a trend line, there's a breakdown, everything kind of lines up like we've been talking about. 2% down on the week. This is equal weighted transports I like to use. No reason to think that it's not going up. We know that, right? It's in a downtrend. Lower highs and lower lows. We'll see if it makes another lower low or not, right? Definitely made a lower high. Trend line still intact. Moving averages still running the show longer term. That's what that's all we can say about that. And then there's home builders. So home builders are above the 200-day, and there's a rising 50. That's a positive, right? On the week. They were actually green on the week, which is, crazy, but true. So that's a positive, right? I mean, home builders, one thing I like about the home builders is that they drive a large part of the economy, and they were green on the week. Now, do they look great? Nope. They don't look great. You got this kind of like false breakout here, if you want to call it like that. Maybe this area is a better, the green area I could move up a little bit, maybe make it bigger or something like that, right? But overall, I mean, just not looking good. Kind of like the semis in a lot of ways. Kind of move sideways, try to move higher, couldn't, failed. This 59.31-ish area, this green area, that's got to hold. If home builders break down below there, I guess that's the forecast of the weakening economy and so on and so forth. But they held up, right? So we got to be positive as far as that goes. But are they suspect because they couldn't move higher? Yeah, they're a little suspect right now. They're not looking like great, right? All right, let's move on to the internals. Get this off, get this off, get this off. Dun dun dun. And we'll go line chart VIX. So here's the weird part. The VIX isn't spiking, right? Like you would think that if volatility was about to go off the charts, that you would get this spike in the VIX. We're not seeing it. We're just not seeing it. When you look at credit spreads, credit spreads are showing a little bit of move, right? It's still in this consolidation pattern area, and we're still waiting for that potential breakout. Maybe it's a false breakdown. I don't know. But we're still waiting for this consolidation to kind of see what happens with it. And we'll see if and when it hits this top trend line, what happens. But we want to avoid, for the bullish case, things that look like this. This is usually the end of the run. So we'll see what happens with this going forward. So within the consolidation area, but you do have that, now a strong move off of this trend line, and we'll see what happens when it gets up to this trend line. So a little more volatile than the VIX is. Credit spreads widening a little bit this week, but still not this, right? So that's a good thing. When we see this, we know that now we're looking for more of a capitulatory type move. What else are we looking for? Let's look at yield, CNX. Since we're talking about bonds, yields continue to fall. So when they're rising, that was a headwind for stocks. Falling should be a tailwind for stocks. But unless the reason why they're falling is because people are selling stocks to go to a flight to safety, which is possible. And when we look at TLT, again, we saw a big move off the bottom and then break the trend line. And again, this may be a safety type of trade. We'll find out. Dollar continues to fall, and I kind of posted this on Twitter. Is this a falling wedge, and you're going to get a gigantic spike in the dollar? I don't know. Maybe these lines don't mean anything, but a spiking dollar would be a huge headwind or very bad for stocks. And so definitely something I'm watching. It did just break out of this falling wedge type pattern. Whether it's, this is a legit falling wedge or not, right into, potential support, and going back, you see where this green zone is. It was the 2016 highs. It was the 2020 highs. And then, we fell right back into it. So we'll see. We'll see next week. If this really starts to spike up, then there's a legit falling wedge. Watch the dollar spike in the dollar. Again, it's going to be a major headwind for stocks. Okay, so just be careful there. Looking at the put call ratio. Okay, so put call ratio. Now, let's talk about put call ratio real fast. Equity only. With 0 date options, I'm still evaluating on how relevant this study actually is, because you can see 0 date options came in, and you're seeing these gigantic movements, gyrations, which this really, I guess it's had in the past. I don't know. It just seems a little bit more wobbly, but this got to an extreme on Friday. Hence, I would expect maybe a pullback. Maybe a pullback. 12. Sorry, I'm going to just write this in there right now before I forget. All right. And maybe we get a pullback early next week, right? That's a possibility. Just because it got to a little bit of an extreme right there. It could get worse, absolutely. We've seen other extremes here. I gotta make it red, right? Gotta keep everything consistent. There we go. So anyway, we got other pullbacks, every time it comes out here, and we may get the same. It is seasonably the time for the Santa Claus rally next week. So that would make sense, right? Seasonal for a week or 2 weeks, we get some sort of bullish action. But especially this kind of being extreme on the bearish side on the put call ratio. So definitely something to watch for, especially early week, some strength. That's a possibility, right? We can't, again, sentiment is very, very hard to evaluate. So, this is just one way to do it. Again, I'm going to kind of track this a little bit closer just to see how the extremes are, if they still work or don't work. All right. And then let's look at breadth. Breadth is falling. Right now we're at 45. It's went from 75 to 45. That's a 30% move in breadth. That's, a decent move. Nothing crazy, nothing like this. And listen, are we due for something like this? I don't know. It's possible, right? Like, this is the scary part, the part we have to be aware of, that, that we have to be concerned of, and we may be in this section, we get the bounce back, and then we get this section, right? So that's, if this is a template of not only price action, but in some ways, human emotion, right? You get a big move down, you get this bounce back rally, and then you get the bigger move down, right? Big move down, bounce back rally, big move down, bounce back rally, big move down, right? That's it's human emotion. So you see it here. So again, I'm expecting that we may be in this section here, right? And then we may have some kind of bounce back. And I don't know how much that bounce back will be, but over the next few days or a week or two, we could get a bounce back and then potentially a next bigger move down. We'll see though. What else are we going to look at today? We can look at Bitcoin. What the hell? Bitcoin looks like trash. Lower highs, lower lows. I still think this 13,000 level makes sense, and maybe that's where the market eventually bottoms. This was the 2019 highs, 2020 highs. Right around this 13,000, and we'll see if it holds or if it doesn't hold. If and when price gets down there. Okay, so let's go and sum up everything that we talked about today. Basically, the market is in a very precarious position here. I would say, in my opinion, any strength next week or so, next 10 days, I would think that that's a place that maybe you could sell if you wanted to short the market. That may be a place that you may want to, initiate some shorts if you get a nice strong bounce. We saw that, this move down, how fast and how extreme it was, may have been a sentiment shift to a bearish sentiment, which will go with the idea that you get a bounce next week again because it was such a harsh move. You also have the seasonality behind it with the Santa Claus rally. Maybe we get a nice move, maybe back up to this 200-day, maybe up to the trend line. Who knows how strong the rally will be? And then, but again, just be real careful. This is a very tenuous market. And so it's not one to be trifled with. And I'm all cash right now. I'm gonna watch. I may not even have another position the rest of the year potentially until we can really get better understanding. But we'll take it 1 week at a time. Hope y'all are doing well. Take care. Don't forget, I'm on Twitter at AlphaCharts365. And if you haven't liked and subscribed to this video and you made it all the way to the end, please give me a like and a subscribe. Thank you so much. Y'all have a great day.